Hi, and welcome to the Sampford Advisors Software and Internet Monthly Report for January 2024. As usual, we're going to review the previous month's M&A and venture capital activity across the entire software landscape. So let's dive in on the M&A front. In January, we saw $5 billion invested across 109 transactions at a median revenue multiple of 4.9 times. Despite seeing deal volume surge near the LTM monthly average, January was light on capital invested. This is due in large part to fewer transactions disclosing deal value. In fact, only 10 shared this information. Of the 10, most of the dollars invested came from the Vista Equity Partners' $4 billion acquisition of EngageSmart. All things considered, the high number of transactions is an encouraging sign for 2024 M&A activity. The abnormally low level of disclosed deal statistics is evident by the dichotomy between expected deal value and volume in 2024 based on annualized January figures. From a volume perspective, 2024 activity is anticipated to be more or less the same as 2023, while on a dollars invested basis, 2024 is on track to be approximately 80% lower than the year prior. Interestingly, the split between private equity and strategic buyers shifted 2.5% in favor of private equity over the last 12-month period ending January 31st compared to December 31st. A greater number of financial sponsors transacting suggests a higher level of confidence regarding the economic and business environments and bodes well for M&A activity as private equity represents a very important buyer base in the market. Since the third quarter of 2022, median software revenue multiples have consistently been between 4.5 times to 5.5 times. The 25th and 75th percentiles have also remained relatively steady over the period. The observed level of consistency can be partially explained by an M&A market that almost exclusively supports higher quality assets, thus resulting in a consistent and tighter interquartile spread. The SaaS premium was reestablished in January 2024 as the median revenue multiple surged to 10 times for SaaS companies compared to only 4.9 times for non-SaaS companies. Although less stock should be placed in this phenomenon because of the low number of deals that had disclosed valuation multiples, SaaS companies also outperformed non-SaaS companies in the public market, as SaaS companies returned 9.2% versus 5.9% for the month, thus lending more credibility to a widening valuation gap between the two software business models. As discussed on the previous slide, SaaS companies in Sampford's proprietary SaaS index outperformed non-SaaS companies by a margin of 3.3% in January. The broad pullback towards the end of January is more or less attributable to messaging from the Fed indicating it will hold steady on rates and that a March rate hike is unlikely. The 109 transactions recorded in January of 2024 marked a stark rebound in deal activity compared to the 24-month low that we observed in December of 2023. This level of activity is close to the LTM average of 111 and is a positive sign for 2024 M&A activity overall. However, we still do not expect to see a consistent and material rebound in deal activity until the second half of 2024. Now moving on to venture capital. Despite seeing an elevated number of VC transactions closing in January relative to the prior month, the total capital invested declined to $2.9 billion. The lower level of invested capital is explained by the relatively smaller deal sizes observed in the first month of 2024. The median financing was only $2.5 million in January compared to $4.1 million in December, and January only saw one raise above $250 million. Similar to M&A activity, January 2024 saw a material rebound compared to December of 2023. Despite the jump in activity, this month's deal count remains below the last 12-month average of 546. Lastly, we'll cover annual statistics. We can see that the annual deal volume is expected to fall 26.4% to 5,280, while annual deal value is expected to decline 49.8% to $35 billion. This would be the lowest level of capital invested since 2017. However, we expect VC deal value to stabilize at a more elevated rate going forward as lingering effects from the COVID boom persist. That's a wrap for this month's Software Monthly and Internet Report. As always, thank you for listening.